Good afternoon, everybody. Today is Monday, the 24th of October. This is Brian Shannon speaking. Let's take a look at these markets. It's Monday, so that means Realtic is the one who is sponsoring this video. And for people who aren't subscribers to Alpha Trends, that's why you're viewing this rather than it being behind the paid area. But, anyways, Realtic is the charting platform and analysis tools and where I execute trades as well. So check them out at realtic.com. The market's doing what it's supposed to do here. It looks like we got a good clean breakout on Friday. We had on Friday breached the 123.5 level. It pulled back and tested it briefly, if you recall. Dropped below that 123.5, and from there now it's set up a nice continuation move higher. So all the concerns about holding over the weekend and something blowing up in Europe or you know obviously not didn't come to fruition. That is, nothing bad happened, and we had a gap higher and just a nice strong session throughout the day here today, as the SPY stayed above that volume weighted average price for almost the entire session. There was one nice little pullback right to the VWAP here, and these are the types of buys that make a lot of sense when it starts rallying back up out of there and then setting the low for or I'm sorry, the stop below the most recent higher low, and then to keep your stops, keep raising them up. But the market traded cleanly higher today, up to where we're looking that it should, which is first of all, we exceeded this little low from back in March. You can see that there. This low here is, I believe, 126.19, and that's going to be an area that other people will be looking at. So really, I think 126.19 up to basically 126.50, and then what I had drawn on a blog posting earlier today was the retracement of the year high to the year low, and that would get us up right about where we are here, right about that 126. So we're in an area where it looks likely that there might be some resistance coming in, but right now there is no evidence that this area is holding as resistance. As we know, we had that monster move off of the failed breakdown, and last week we saw a consolidation through time rather than the price pullback that most people were looking for. So we have nice movement higher. We have higher highs and higher lows. I think tomorrow you probably want to be aware of if the market breaks below 124.90 and then stays below that level for more than a half hour or so, that perhaps we could pull back down towards the breakout level down to 123, 123 and a half. But for now, it looks like the market is headed up towards about 126 and a half to begin with, and then we'll see what happens from there. Perhaps we're going to see a test of the 200-day moving average, which right now is right up here at about 127 and a half. So the market's still got some strength left in it. There were 2,500 advancers to 519 decliners today, so broad participation. And the Nasdaq had a great day as well, up 2%. And excuse me, really getting close to only about a dollar and a half away from. So today it was up $1.19, only a dollar and a half away from the year high, and that year high, of course, is also about a decade high. So the Nasdaq is really continuing to outperform on an overall basis. And looking at the 30-minute time frame, we got back above that 5-day volume weighted average price or 5-day moving average rather, and took out this little level of what we were looking at as potential resistance. Now we probably want to see the Nasdaq continue to hold above 58 just to have a good strong feeling about the long side here. Russell 2000 started playing some catch up today with its 3.2% gain, and we've been watching the Russell as far as it had the pattern of lower highs and lower lows. We broke that pattern. We had a higher high, then we had a higher low, which was tested twice or tested once in here last week after this time consolidation, and just a nice continuation move higher out of here right now. The key level on the upside would be right about in here, right up, at about 74, this prior high. In other words, the Russell hasn't yet made a new recovery high. That high is actually $73.89. I don't think moving up to 73.90 is a reason to get bullish. This market has been sending us good messages, and it got past that resistance here today and really just continued to ramp higher. We had that same type of pullback that we had noted in the Russell, I'm sorry, in the the S&P in the Russell here today as well. So real strong opening drive, and then a nice little bullish flag pull back to the rising volume weighted average price, and then just a nice continued move higher from there. So the Russell, maybe 74 becomes a little bit of resistance for this market, but up above that we've got a bigger level near about 77. And that's where we have to look as far as the intermediate term trend is higher. We're above a rising 5-day moving average. We just experienced a nice time correction, and as long as we maintain really probably even higher, lower than the 70, 7270. If you take a look at, that's basically about where today's VWAP is as well, closer to maybe 7290. But I think of $72.70, you got to expect a little bit of a pullback, maybe down towards 72 and a half. If we took a look at the VWAP for the last 2 days, that's all the way down at 72. So we've got a strong move. We've got strong movement in the Russell 2000 approaching its 100-day moving average and those prior highs. Those are two things coming together in one area, and a lot of times that makes those levels a little bit more important because there's more people looking at them because they have multiple reasons to look there. But nothing indicates that level will be resistance. And in fact, if we can get above and clear that level, then it looks like a nicer rally towards 77.5 would be coming in the Russell. The semiconductors played a little bit of catch up as well with their 3.1% gain in here today. They broke past that recent recovery high as well. So the semiconductors had that big rally. They held in that 29.5 to 30 as support, and here after that time consolidation for the semiconductors, we had kind of a little pullback on Friday afternoon, and then a nice similar setup here today with this little bearish flag here forming on the 10-minute time frame. So bullish flag. Did I just say bearish? I don't know what I just said, but it's a bullish thing that we're looking at here. The 70, 31.75, maybe 70 above that, perhaps it continues to move higher. We are above an important level, and we've got this prior support just ahead at about 32 and a quarter. So keep our eyes on that. But again, there's no reason to be looking for short sales in this environment right now, while the intermediate term is controlled clearly by the buyers. And the same thing goes true in the financials. The financials broke that downtrend that they were in. That pattern of lower highs and lower lows was replaced with this higher high right here, and then this was the higher low that held at 1220. We broke past 13, and we've got a nice clean breakout past 13 that's now looking at 13 and a half, these prior recovery highs, and getting up through 13 and a half, then we could continue to see further upside. Don't look at this as resistance, 1348 actually. Look at it as a potential level, something to keep your eye on and be aware of. Let's see if we've got the 100-day moving average in there as well. So perhaps we get some resistance in here, but again, we're above the 1-day volume weighted average price. We're above the 2-day volume weighted average price, the 5-day, the 10-day, the 20-day. So these markets had their shakeouts. They're enjoying this rally still. A lot of people were skeptical of them because they started on light volume, but they're continuing, and it's only price that pays. So hope you're doing well with this bullish action, and thanks for tuning in.